The trading community is always so full of advice, but what if I told you that a lot of it is unintentionally misleading? And is having a trading community really helpful, especially as a beginner trader? In this video, I'm going to be debunking the common trading advice we always hear and helping you cut through the noise and understand what the trading advice truly means for you. First one, it's easy to become profitable if you're a swing trader. The reason why this is so misleading is because your trading strategy should depend on who you are as a person. If you're swing trading and you're someone that wants a little bit more action, a little bit more analytical thinking behind your trading, a lot of the time you won't want to wait for a setup to play out over 4 hours or a day or whatever it may be, right? And look, this could be an opinion of mine, but I think it's easier to predict the direction of price for 10 minutes compared to a day. And that's because a lot can happen in a day compared to 10 minutes. And the analogy that I use with this is the weather. If you ask the weatherman, what's the weather going to be tomorrow? He's likely going to be able to tell you what the weather is and be a lot more accurate, right? But when it comes to asking him what the weather is going to be in 2 months, he's probably going to have no idea. And if he does, his accuracy is probably going to be a lot less. And that's because we're acting off information that is more current. If you're a scalper, for example, you're reacting to information that's happening at that particular time. Whereas for a swing trade, you're going to be long in a trade from information that you gathered over a day ago, which could be totally inaccurate at that point. Now, I'm not saying you can't be profitable as a swing trader or that it may not be easier for you. See, the thing is with swing trading, I believe in the way I've always seen it is you always need to trade what strategy is going to be better for you. And a swing trader might fit someone who maybe trading isn't the number one thing and really they're probably just trading to make a little bit of money on the side, and they've probably got something else that's probably taking a lot more of their attention, something that they're more interested with. And swing trading allows them to balance that life, right? Whereas if you're someone who likes to be more analytical and more involved with your trading itself, you may fit being a scalper more. But if you're a very emotional person or someone who is likely to fall victim of a gambling mindset, scalping could probably put you in an area where it's going to be very hard for you to battle with that. Whereas swing trading, it's much more of a set and forget, and it's going to be a lot easier for you to manage that. Same as if you're a very quick thinker, scalping is probably the way to go. If you're someone who needs a little bit more time to consider things and is a bit more of a slow decision maker, maybe the swing trading is a better option. There is no wrong or right, and something you've always got to consider when hearing advice is you. And think objectively about the advice you hear always. Now, number 2 is you need to back test a lot. Now, when I first heard this as a beginner trader, I was like, okay, well, when I start my journey, I'm going to back test hours and hours and months and months, and that's going to help me become profitable in the end. But what I found was there's always a right time for something in someone's journey. And again, that comes back to you and what you feel intuitively throughout your journey. I think it's good at the beginning to backtest somewhat or backtest a strategy that you feel you've connected with, and that's to gain confidence on the strategy itself and your statistics around the strategy. So that way, when you bring it to a live market, you understand what you're aiming for. But there becomes a point where it delays your development. And it did for me. I spent probably, I reckon, 6+ months backtesting. And what it did was I was just constantly backtesting the strategy that once I got to the live market, I then wanted to tweak and then go back to backtesting. And then I realized that, oh, that's not really realistic or that didn't work. I need to take that back and then retest it on backtesting. And I guess what I'm trying to say here is that I probably could have done with 2 months of backtesting. And as I started to forward test and then paper trade, I then saw things I needed to improve. And then I wanted to backtest those things and then re-implement them. And this is why hearing once-off kind of advice comments can be so misleading, because you need to understand where it fits and what that person means by backtesting. And it always depends on you specifically and where you are in your journey for where you may need to be using it. See, the truth is that there's heaps of tools for traders to use, whether it's paper trading, backtesting, prop firms. There's so many things out there, and the key is to use it at the right time for you. Number 3 is if you're a new trader, you should use a prop firm. Now, this one I was really shocked to read, and the reasoning behind why she said it was because new traders lose a lot of money in the first 6 months, 1 year, 2 years, whatever it may be. They lose a lot of money, so you should just lose someone else's instead, right? And that was the kind of mentality behind this advice. But when I read this, from someone who's been doing it for 2.5 years now, I found that most of my biggest lessons came from me losing a lot of money and having that pain and having to be forced to reflect on what I've done wrong. And I feel like prop firms can often disconnect you from what's actually going on and can delay that learning curve because you're not being pushed through those limits for yourself because you're trading someone else's money. You've got total disconnection from that. Now, not only is that an issue, but then the disconnection can also cause you to build bad habits and more gambling habits and a lot of those things as well. Another thing that I think about when I think about prop firms is all the rules. When you're a learning trader, there's already a lot going on the chart. Adding a prop firm to this can just add so many more rules to the mix that you're trying to balance, and I feel that that doesn't allow a trader to focus on what's needing to actually be learned at that moment. With all these rules, they often only allow a very small margin of drawdown. I don't think it's very realistic when it comes to trading. Like the other day, I saw that Umar Ashraf lost $1.4 million. Do you think that was a tiny margin drawdown? I don't think so. I think it's totally normal for drawdowns to happen. And I think prop firms breed bad habits or bad expectations. And for a new trader to come into the market, and I can almost guarantee they'll hit that max drawdown constantly and be reminded that they're a failed trader, which just wrecks a new trader's confidence before they're even able to build that skill. Now, I can understand why there's so many people talking about prop firms in the social media space. The commissions that people get when they sell their code and on their affiliate links, they earn a lot of commission out of these links. And personally, I've had prop firms reach out to me and I have declined the offer because I personally don't feel connected enough with it yet in my journey to go ahead and do that. Now, if I was more developed as a trader, I think I personally would try out prop firms if I didn't have my own money to trade, but that time has not come for me. What I'm trying to say though is that prop firms do have their space, but a lot of the time I don't think it's for new traders. 4 is don't trade with emotion. Now this sentence or advice in itself basically sets the expectation that we can trade without emotion, that it is possible to trade without emotion. Now we know emotions are automatic and a natural way of life. What we need to avoid is the triggers that cause that emotion. Yes, we need to make trading decisions based on facts, but at the end of the day, we will always have those emotions. So how do we cope with them, control them, or avoid the trigger that will cause us to trade emotionally? The healthier truth around this would be learn your triggers and then build a strategy that aligns with your strengths and hopefully avoids the triggers that you have. And if you do have triggers that will likely not always be avoidable, learn how to cope with them, learn how to recover from them. If you learn them, you'll know, okay, I'm just being triggered, and you'll likely stop trading for the day. And oftentimes this will also take a while in trading to understand or grow with as you understand yourself when it comes to your trading strategy and how you react to things in the market. 5 is cut your losses and let your winners run. Now, obviously, in its plain form, in a way, yes, this advice is good, but you have to always be objective when it comes to these things, because I found this advice that I heard over and over and over again, it caused me to overmanage my trades. It led me to exit trades that were valid way too quickly. And it also led me to try and let my trade run too long based on nothing, right? My strategy, because I'm a scalper, it's just not an expectation that your trade is going to last for an hour, right? That you're going to be in this long trade for an hour. It's just not going to happen. And what this did was I kept trying to like trail my stop and trying to get as much as I could out of a trade, but oftentimes it caused me to give more profit back than I really wanted to, and it just didn't really work out. And this is where I should have been more objective when I heard this advice and thought, okay, how does this fit in with my strategy, or does this apply at all? And the thing is, it does apply to trading. Your losses need to be smaller than your winners. They need to be bigger, right, than your losses. We all know that. And I think that's where this piece of advice originated from, but you have to be objective when it comes to your strategy and understand what that means for you. And you can do this by consistently journaling and refining your strategy. I found it easiest and most effective when I was forward testing or simply trading and journaling and refining it as I go along. I have felt the biggest growth in my journey has been from doing the craft itself, not paper trading, not back testing, simply doing it, not risking a lot, and just journaling everything as I go, looking back, refining, looking at the data, going, okay, this could be better, and refining it and continuing that way. And using my own money has also helped me do that in a more accurate way because I've got all my emotions attached, right? I'm not missing any element when it comes to trading. If you haven't noticed yet, everything that I've said has pointed straight back to you, your strategy, your weaknesses, your strengths, everything to do with you. I'm not here to bag out trading communities. I think because it's such a lonely sport, it can help, but it can mislead so many people out there. And sometimes you often hear advice that wasn't meant for you at that point in time. Like you have traders who are out there making 200K a month and then they're talking about sizing up and how they plan to size up, and that's fine, but you've got to understand that as a new trader, that is nothing you need to be worrying about. Or dynamic risking. I think a new trader should not be worrying about that at all because you've got to learn to crawl before you run. Okay. And you need to understand that in some circumstances, when you hear advice, it may not be for you at the stage you're in right now. That's why I believe new traders should be very, very cautious when joining trading communities at the beginning of their trading journey. And at the end of the day, if you are going to, and you do need that because it is a lonely sport, as I said, you've got to be very objective and understand yourself on a deeper level. And for a lot of the beginning of my journey, I was very much within myself, didn't really join too many communities because I felt I needed to learn myself more and get more connected with myself, because at the end of the day, myself was everything, right? How I reacted to things, what I liked about trading more, what I didn't like so much about the trading. All of these things were things that I had to learn for myself. And if I had other influences, and a lot of time, even if you are a very objective person, these things can influence you a lot. So all I'm saying is, unfortunately, this journey is a soul journey. It's a lonely one, and it's a lonely one for a reason, because you're the one that has to trade the strategy. You're the one that has to be connected to it. You're the one that has to understand it. You have to understand yourself to be good at trading. I just want to protect people out there, because I feel as though unless you've got like a trading buddy that is there sitting with you and like knows who you are as a person, knows what you struggle with, knows your weaknesses, knows your strengths, and understands your trading strategy front and back, they're probably not someone who can give you advice on the struggle that you're struggling with right now. And a lot of the time, the only person that can help you the best is yourself.